And today's agenda, we have property breakdown of two offerings. So we have Buckingham Estate and Ibudo Wura. So this is what we'll be talking about today. Yes, we'll be talking about that today. And so before we go into that, we know you have some questions in mind, like what exactly is this property? Where exactly is this property? All these properties located? How does the co-ownership model really work? Yeah, and how can I start earning returns? Why is this property a game changer? Yes. What kind of property what kind of return rather you can expect, and what are the documentations? What do they look like, and how is it structured, like, and how we've structured it for these properties for both affordability and flexibility. So I won't be the one taking this to break that down clearly and to walk us through where, how, and when. I'm honored to pass it over to our CEO, Jose Maria Agulana, and he has been at the heart of this mission, championing smarter, simpler ways for everyday people to own property across Africa and beyond. And tonight, he will be helping us understand the full picture of these unique these properties, yes, the Buckingham and Ibudo Wura properties. And there are two exciting, fully serviced co-owned short-let properties in Lagos. Yeah, I'm honored to welcome Jose Maria. Hi, Jose Maria. Good evening. Over
Hey,
to you.
how are you doing? Thank you so much. I really
Yes.
appreciate you setting things up for everyone. Thank you. I would be breaking things down, but before I just jump right into it, I just want to say welcome to everyone that took our time on a Friday to join us to break down some complicated things into simple English, right? So we're going to spend a couple of minutes just breaking things down to to the granular formats. And if someone is an experienced real estate person here, just permit me to simplify it to the basic level for anyone that wants to get into real estate. And that's really at the core of what we're trying to do with Keble. Is we've always focused on simplifying real estate assets as we scale, right? And we've done projects in multiple locations. At the moment, I think we've done in over 3 continents, spanning different offices, different commercial buildings, residential. So it's always nice to have a chance to explain what we're doing at scale, and also provide some insights on why we are picking certain locations compared to the other locations. Like, why are we not in Apapa? Why are we here, right? So we're going to be breaking that down as we go along in the conversation. So we have 2 properties, at the moment. Both of them are in Lagos. Compared to the last, I think we had one 2 weeks ago, that was also a co-ownership project, and it was in Ibadan. And we explained why we picked that particular location. We explained the migration that was happening there. We explained, the returns that can be generated in that asset. Today we're focused in Lagos, the capital city, of Africa. Sometimes I used to say that every time. So we're going to focus on that and see how we can, break it down a little bit more. So let's dig in. The first property we're looking at is the Buckingham Apartments, and is in Alagomeji, right? That's on the mainland in Yaba, for people that are not familiar with Lagos and what's happening here. The property is a 2-bedroom vacation rental apartment. A couple of things you should note. We're going to be pointing out some landmarks and why they're important, right? So I don't want to mention just random landmarks and it flies off everybody's heads, right? So important landmarks to note. There's the University of Lagos, right? It's roughly from this location is roughly 15 minutes drive, from there. There is another university location, which is Yaba Tech, right? And there is a train station, right? I think last time when we had a conversation, we mentioned that people were moving from Lagos to go on vacation to Ibadan, right? To relax and everything. And they go through by road or they go through the train station. Now, this train station is literally in this location, Alagomeji, Yaba, right? So where people would commute to get to Ibadan, and where people would settle if they're using the train every single day, if they're touching base to Lagos from the train, they would settle in this location, right? So that is, I want to just set the cost for that. Now, the numbers tell a deeper story, right? We're going to be looking at the prices of assets, especially two-bedroom apartments, right? We're also going to be looking at the rental prices, and we're also going to be looking at the short-let prices as well. And we're going to be seeing, okay, what is going on, what's driving this price increase, and what does the story tell us at the end of the day, right? So as of now, the price for two-bedroom apartments on average, right, we can see here is at 90 million, right? These numbers are gotten from a couple of places. So all the listing platforms that offer, sales, if you think of Property Pro, you think of Nigeria Property Center. So these prices are gotten from those sources. In real time, actually, the prices of two-bedroom apartments, I just checked it this morning, it's over 200 million, right? So roughly between 175 million to top 200 million, that is the price range, right? This 90 million here is essentially one-bedroom apartment if you want to buy it as of today, right? That's the price of a one-bedroom apartment in Alagomeji. And we're seeing the price increase from 2015 going directly, every single year appreciation. If you check the growth rate is hovering between 300% in the last 10 years, right? So that's the price, that's the range of capital appreciation that people are seeing in this particular location, right? And I'll also give you some insights on what is driving that appreciation. So people would say, okay, the prices of cement has gone high. That is true, right? The prices of construction essentially doubled between, 2020 to dates. If you see this huge spike here from 2020, you see that a lot of things changed between 2020 till dates, and it's true. Like dollar affected it. The inflation rate affected it. Every single thing sort of accumulated, and it's sort of made it. Price assets, especially in real estate, skyrockets, in that form. But there is also a deeper story to tell, and I'll tell you guys later. So aside from the prices of, apartments, right, you're also seeing a huge spike in the rents as well. Like I mentioned earlier, like 2020 to date has also seen some elevated progressions on the rental prices, right? This year alone, when we did our analysis, we noticed that between last year and this year, rental prices, especially around Alagomeji, have increased by over 50%, right? So this is not even short-let. This is just normal rental apartments going around, like moving out. This is just, I want to live in a place like this, 50% increase in rentals, right? So a lot of things are driving this. Obviously, we mentioned inflation is one of them. But it just shows that when people are talking about, oh, my rent is increasing, oh, cost of living is going high, the people that own assets are the beneficiaries of that increase, because they essentially would use that asset to settle their own bills at the end of the day, right? So if you have an asset, you can actually pour your resources into that asset, and those assets can be able to settle those bills as you go along. And that's essentially what's happening. People are saying that everything has increased. The owners of the assets would want to accommodate for that increase. And the end result is that the people that don't have that asset or that are utilizing that assets would essentially feel the brunt of that cost at the end of the day. Right? So that's what's happening here. And this is the short-let market as well. Let me see. Yeah, this is a short-let market. You can also see the increase as well going consistently as you go along. Now, one of the things I wanted to note is that the way I see Alagomeji is the way I keep saying that Alagomeji is VI in 2013, right? There are lots of businesses, workspace, tech hubs, restaurants, lounges, banks, insurance companies, investment companies here, right? The likes of Paga, Axamansa, Tangerine, Kuda, Go My Code, Cardinal Stone, Ozone. The list goes on. You can see Keble here, right? We are in the vicinity as well, right? So we know this area really well, and we've seen this area also progress consistently, right? Because more businesses are coming here, right? As we're talking to you, like on average, in every corner around Alagomeji, a construction is happening, and it's either fueled by, I think what I'm saying is that it's fueled by a lot of businesses, and because businesses are coming here and setting up here, it's also leading to the rise in residential opportunities as well, because more people want to stay closer to the business, right? They want to be able to live closer to where they work, right? And people are offering that service. Developers are seeing that and saying, okay, this makes sense to build more residential apartments in this location because businesses are situated close to this area. It makes sense to build more lounges and restaurants because businesses are situated in this area as well. So you're seeing that understanding of, okay, if businesses are going in this direction, it means that complementary services should also match up as well. And that is what's happening typically. So that is, aside from the macroeconomic issues that are happening generally, this is the foundational work in terms of demand and supply that is happening at Alagomeji. So what do you own? You know, to the meat of it is like, what are the things that you're actually owning, right? You own, when you buy a stake in Buckingham, you're owning it for life. So that is an asset that you own consistently that yields you cash flow for life. There's no 13 months for people that are used to Keble investments. There's no 13 months, there's no 2 years, there's no 3 years. This is something that you can literally pass on to your children, right? So that is one. The second thing is that you also earn consistent income every single month, right? And the reason why we're doing consistent income is that you're able to maximize the return that you can generate in this asset as much as you can, right? So that's two. The second thing is that it's a vacation rental, so it's structured in a way that you actually would benefit from owning the assets, right? And because it's co-ownership, right, you want a situation whereby if you're in the country or if you just want to set out time to just be with family and stay in some of your properties. I see someone, I think on the platform, someone has bought like 3 different co-ownership structures. So essentially he can decide to say, okay, I'm going to stay in Ibadan for 5 days, and I'm going to stay in Lagos for 5 days, and I'm going to stay in this part of Lagos for another 5 days, right? So you have the flexibility as a co-owner to actually, you know, experiment and go to different aspects of the country just by you just owning the asset through Keble, right? So that's a huge benefit as we go along. I think the other thing that's also important to note is that this is an insured asset, right? Unlike every other asset that they tell you that, okay, it's insured by the fate of the government, or it's insured, or it's not insured, that you can go up and down and, you know, stocks can really disappear. Like you can go 100% today and you can go 0% tomorrow, right? This is something that is consistent, you can rely on, right? This is something that typically the average lifespan for most real estate projects is over 50 years. Right? So this is something that you will see for a very, very long time. And that's where the consistency comes in. So what is the pricing looking like, right? The pricing is simple and it's straightforward, right? The total value of these assets is 200 million, so 202 million, essentially, right? And it's only available for 10 slots at the moment, right? So 10 slots are available to own. And each slot is valued at 20.2 million, right? Now you can decide to make a full ownership payment for 1 slot, 2 slots, or you can decide to make a flexible payment at your own pace. I always say, okay, do you know what? If you have a budget you're working with, you can spread the payments for 12 months and pay every single month 1.6 million to own these assets, right? That is the typical structure that we have. The rental income is over 18 million per annum, right? And every single month, the range is between 2 million. We're going to break this down a little bit more with the financials. I always like to show people the money so they understand it a little bit better. But just one thing before we move to the next property is that this is a central location for business activities, right? There are few locations that show prospects, right? Places like Ikeja, VI, Alagomeji is one of them. It's like the top tier of it when it comes to business, and is a growing market. So when I see something that is growing, you know that there is some upward mobility in terms of the capital appreciation that you can earn, and in terms of the likely rental income that you can generate from the assets when you own it, right? So that is on the Buckingham Estate. I'll sort of move slightly to the next project that we have to accommodate for likely questions. So if you have questions, you can even put that in the chat in case you don't want to forget it, to make it easier for you to come back to it. Now, the second property we want to look at is Ibudo Wura, right? And we went to this location earlier in the week, and it's a very interesting location, very interesting location. It's a location that you tend to look at when people want to run away from the Lagos bustle. Alagomeji is at the center of the business side, so it has its own characteristics. Like once it's in the center of business activities, you're seeing a lot of mobility, you're seeing a lot of excitement, right? That's what's happening here. Ibudo Wura is like, it's the opposite of that. It's like, run away from that excitement, right? Go to somewhere that is completely free, it's completely devoid of noise. You would literally see trees, you would see, it's a very interesting location in Lagos. Like you see trees, you smell. For the first time, I was taking in fresh air. People say that Lagos doesn't have fresh air. This is the first time you breathe in and you say, this air is giving Ibadan air. That's what we're experiencing in Ibudo Wura, right? It's also a two-bed vacation rental, right? But the interesting thing about this location is that it's in Lakowe Lakes. So it's in the estates of Lakowe Lakes and Gulf. This is the only Gulf, to my knowledge, this is the only Gulf estate in the country, right? So when people want to come in and play golf in Lagos, they would only go to this place, right? Right. So that is its unique value proposition. Like I said, the numbers will tell a deeper story, right? It's still in the development phase, but that also gives you an opportunity to also understand the upward mobility of the asset itself, right? You're seeing the growth every single year. I also saw the jump from last year till now. And one of the things I like about this project is it's fully government backed. Like, a lot of people say government backed all the time, but this one has the full weight of the federal government on it. Some of the offerings, this offering was endorsed by the Ministry of Finance to as an offering for people that wanted to own it for life. They were giving different schemes around it. But this is one that is fully serviced estate, offers 24 hours lights, facilities. This is a unique location, and it's also, I like the fact that it's also a secure location from an investment point of view. Also the rental prices. Now, a lot of these are indications of a couple of things. Like again, the cost of assets, construction of assets rise, it also leads to the prices of those assets going up as well, right? As cost of income or cost of expenses or living rise as well, it leads to rental prices going up as well. And you can see that sharp rise continuously, right? I think shortlets in 2020, it was priced at, this is a different slide, but it was priced at a lower price, right? Right now it's over 100,000 naira at the moment. So what's driving this? What are the areas that we're looking out for? Why did we pick this location? A couple of things, right? I think the heavyweight industrial capability of the location, right, has, when you see things like the Dangote refinery that is going, I think they're meant to go on IPO pretty soon, right? That's a good indication. There is the Eleganza Industrial City that is there. That's a good indication. What does that tell you? It tells you that one, people are going to be working there, right? People are going to be commuting, right? And you want to create a serenity whereby people can, if they're having, for example, if they want to host corporate events, if they want to host dinners, if they want to host things, they'll typically go to areas that are calmer, and Lakowe is a unique value proposition for this set of clients, right? There are large construction work going on in this location as well, like Mr. Africa and Landway is a big investor in the location that we are based in right now. And obviously, education is important. It brings in top-tier academics, it brings in executives from different locations, and they want a piece of tranquility. And that's what Ibudo Wura is an area filled with tranquility. Like I mentioned, it gives you the fresh air that you need, right? And they're obviously like leisure areas. Like I mentioned, the golf course is one of them. The beaches are close to it as well. So really good location for tourists, expats that are coming into the country. And if you see the companies that I mentioned earlier, they are the ones that are bringing those people into this location. And it's interesting because you want to see how you can position the assets in locations that are easily accessible to individuals that are working in certain companies. Great. Like similar to what I mentioned in the benefits of owning this one has a lower price point, right? I'll get to that in a bit, but it's still the consistent thing. Like number one, the capital appreciation is there. Number two, the consistent cash flow you're generating from the assets is there as well. And you also benefit from the vacation, but like you could literally stay in the place, right? So it's not an asset that's, there are two kinds of assets I keep telling you. There is the financial assets and there is the fiscal assets. Financial assets are the ones you see on your screen and you never get to visit and you never get to see them at all. This is one that you can say, do you know what, if your family member is coming into the country, you can say, I have a slot here. You can stay there for a couple of days, right? It's on me, right? This is the flex that it gives you when you own a property here. And again, the last thing is that it's a lifetime ownership opportunity. And when I say lifetime, I mean that you have the ability to own it for life, but you can also decide to sell it, right? So that is, you have the ability to sell it anytime, to be honest. But the way it's structured is that you can own it, regardless of how long it takes. All right. So yes, this is the price point of 126 million, right? And there are 30 slots in this particular location, right? And the minimum per slot is 4.2 million. And you can decide to own multiple slots, and that's okay, right? Or you can decide to say, okay, one slot is 350K, and you can pay that every single month for the next 12 months, right? This property is already locked down, so there is no, situation around it. It's locked down, it's secured, it's in a perfect location, to be honest. I don't know if anyone has been to Lakowe and you've experienced Lakowe at any point in time. You understand when I say the fresh air there is different, right? And yes, to the financials, right? So general monthly income is around the 530, 83,000, and the yearly annual income is over 101.6 million. I'll be going to the financials in a bit, but I don't know if anyone has questions. I can touch that before I get to the financials. I think someone asked a question, so just touching that, allowing for a conversation to happen. So if you can help me with the question, that'd be great.
Okay, so from the chat, Sarah Adeduru, yes, Sarah Adeduru said, she has two questions. Could you please explain why the arrangement with Ibudo Wura is limited to only 2 days? That's the first question. Should I go to the second one?
Yes, second one.
Okay, so given that an increase in property value typically leads to higher rental rates, should investors also anticipate a corresponding increase in returns? Oh, it's actually 3 questions.
Okay, that's right.
Mm. So the third one is the property document notes approximately 53,000 naira per investor per month. Considering the deductions from additional charges, what would be the net monthly amount an investor can realistically expect?
So the first question is, why is so sorry, why is it limited to 2 days? So if you
Please.
notice in the Buckingham Estate, we opened it for 10 slots, so that's why it's slightly higher, right? In terms of the timeline, we want you to benefit from not just the income of the asset, but also the experience. But we want to balance it. We want to make sure that everybody actually earns income that matches up to the expected returns that you're meant to get from the assets. But we also want to create experience for you. So if you buy more than one slot, you get more than the 2 days. That's typically what I say. Right? If you buy, I've noticed people are buying multiple slots, so that's good. So for each slot, they get 2 days. So if you have 2 slots, you get 4 days. If you have 3 slots, you get 6 days, right? And that is solely baked into the model, right? But we don't want a situation whereby you're not making enough money because people are staying too long in the assets, and I want to balance that for everybody to actually share in the experience, right? And also benefit from the consistent income that is being generated. And I will also break that in the projections, because we actually the model that we're working with is not with the 12 months. What we are saying is not even a 12 months time period. We're using 9 months, right? So every return, every projection we're using is a 9 months projection. We've eliminated 3 months. It's not like we've dashed the 3 months into the air, but we just said that we're working with 9 months because we want to make sure that we're very conservative in the returns that we're even saying or mentioning, right, at the end of the day. So yes, the returns can be much higher than this, to be honest. But we want to make sure that we, from our own experience, make under promising and over delivering is a very fantastic thing at the end of the day, right? So that's important. Given that an increase in property value typically leads to a higher rental rates, should investors also anticipate corresponding increase? Yes. Again, like I said, you own this for life, right? So if property prices increase, you would feel the increase. If rental income increase, you will get it. This is not a fixed income. It's not fixed. Months where, and I'll show you in the model, months where, especially in Charlotte, there are peak months. There are really months that are the most expensive months, like December, right? The price essentially would add an extra 20 to 30% just because it's December, right? There are Valentine periods, the price essentially spike just because, right? So those things also, you also feel that increase as you own the asset, and that's the benefit of what we are providing. The documents projected this. Yes, we'll talk on that. We'll talk on that. Yes, what we essentially put out there is the gross income, right? There are other fees because again, you're a landlord, so there are fees that are layered on it that you can also deduct, but we'll explain that in the projections as we go along. Okay, yeah, she asked one, just to touch on this. What about if an investor cannot meet up with the monthly payment plan along the way? What would be the consequence? It really depends. Like, it's a situation of, is it that you can't meet up this month, but you can meet up next month, right? Is that a situation, or you're just tired? So those are two different situations. If you can't meet up this month, we have a grace period of 30 to 60 days actually, so you can continue paying from next month. If you're essentially saying you cannot do it again, then there are penalty fees for that. I think at this moment is around 40% of the total cost, yeah, of what you've paid. So we'll return back your money, and we'll open up the opportunity to more people to buy. And typically it takes within a week. I think it happened within a week it's got closed out. So I think that's typically the case.
Sorry for butting in, but in that case, can whoever is defaulting, can they expect any sort of like returns from the property for that month or period of default?
Yeah, so the person is still paying for the assets. They've not fully owned it, so they are not benefiting any return while paying, So you have to completely own the assets for you to actually start earning any income. So what would happen is, let's say I've paid off, let's use an amount, 1 million naira so far. And at that point, I cannot continue, right? Essentially, you're saying that, okay, I can't do this. It's beyond me at this point in time. No problem. We have to take off fees, and fees are usually 40% for residential apartments because that money has already been put into the projects. You know, we use it to buy cement, stuff like that has been gone into the project. So we have to recoup that whole thing essentially. So typically it's 40%, and that's like 400K. The balance is paid to you within a time period of time. So I think that's typically the, but if you've not started any, if you started any income, that's a whole different scenario at that point in time. Obviously, because you've owned income, you would be entitled to that income at the end of the day. I hope that answers your question.
So if I understand you correctly, you won't have to pay up, like say you want to invest in Buckingham and it is 6 million per slot. You have to pay up the entire 6 million before you can start expecting to earn income.
Exactly.
Okay. Thank you for that clarity.
Awesome. So just to quickly roll back into the conversation, I promise I would answer all the questions, but just let me finish this one. But if you have questions, just so that you don't forget to please type it down, I would answer it as much as possible. Right? Yeah. So this is Buckingham, and like we always say, we're looking at best case scenarios, and we're looking at base case scenarios, and we're looking at worst case scenarios, right? And these numbers are present numbers. They're not numbers 6 months from now. They're not numbers in the future. These are what is happening today, right? The current rate is per night is 120K for Buckingham, and the best rate you can actually generate in terms of return is 150K. Anything more than that, I don't know how they do that on their own part. And the worst case scenario is 100K. And there are periods where you can actually do 100K, especially when you're introducing the assets into the market for the first time. You want people to know the assets, like the place, enjoy the experience. So they call it the ramping up period. So that period where you're trying to introduce something to the market, give a little bit discount to make sure everybody gets into the groove of the assets. So that's typically what happens. The other thing that I want to note is that for weekends, because we're using dynamic pricing, and dynamic pricing means that we price based on demand, and we also price based on seasons, right? So if you guys are, I'm sure everybody's used to Uber now, there are periods where there is surge, right? That is a dynamic pricing in the transportation system. This is now a dynamic pricing in the hospitality system, whereby we implement that on a case-by-case basis based on what's happening in that location, right? So for example, if there is a festival happening in Alagomeji and there is a surge in demand, we reconfigure the price to match that surge. I hope that's clear. So that's where we add a 20% premium on each of the assets every single day. Now, in terms of our assumptions, we are assuming that regardless of what's happening, we're going to focus on 12 days, 12 weekdays, and 8 weekends, right? So that's roughly 20 days, right? So out of every 30 days, we're only going to assume that it's completely booked in the busy Lagos for only 20 days. Granted, it can be more, but from experience, it's best to look at it from this framework because it allows you to plan better, right? This is operating costs, utilities for payments, cash reserves. I'm going to touch on cash reserve because this is something that most landlords don't account for as they are building their asset class. So cash reserves are meant to make sure that we don't go back to you guys to say add an additional money in the future, right? So things can happen in the asset that would require us to fix, right? For example, I don't know, like the roof might be leaking. It's Nigeria, right? Or something could, a toilet might be broken, right? Or someone can essentially tear off a furniture, right? We need to buy a new one. the cash reserve is meant to make sure that we don't say, hey, okay, how are you? Please, we need an additional, 100,000 naira from you. I don't know when can you send that to us? That conversation, I have experienced it as a manager, and it's not a funny conversation because the landlord is like, I don't understand what's going on. So we created a reserve to make sure that for future things like, oh, we need to, for example, we need to paint the place so that it's nicer, right? We need to we just want to make sure that things are working in the right direction without going back to you to say, hey, can you spare some change for us? That's typically not the case. Like I said, there's also insurance policy on the assets so that we don't have issues of theft or fire that happens in the assets. I don't situation whereby all of a sudden the investment goes up in flames and no one can indemnify us at the end of the day. Yeah. So based on those assumptions, that is what we see here. And the worst case scenario is 1.4 million every single month, right? And base case scenario is 1.7 million every single month. And best case scenario is 2.1 million. And this is spread across 10 slots, right? So every single month, after you subtracted the cash reserve, the 10 slots are benefiting from this amount. So that's roughly 200K. This is 1.599, right? And this is 1.3, right? So when you divide this by 10 slots, you probably get 150. Yeah, that's typically the case on this. And this is 200K plus every single year for each person that owns the assets. Yeah, so that is on the Alagomeji assets. Quickly going to the Ibudo Wura. Yeah. So these assets, like again, is having the base case scenario, the worst case scenario, and the best case scenario as of today. This is the price that you can get it today, right? And the same assumptions actually prevail. Like we make sure that there's a premium but dynamic pricing for the weekends, and certain seasonal differences can also adjust. All right. And we also account for, again, we're actually using 12 days and 8 weekends. So we're using only 20 days out of the 30 days in a month, right? So these assumptions are very, very conservative, right? And the reason for that is we want to make sure that we've sort of baked in a lot of things ahead of time to make it suitable for you to plan your financial forecast. And simple things like operational costs is there, utilities, explain cash reserves, and monthly insurance. And once all of that is baked in, right, the base case scenario every single month is 1.1 million, right? Best case scenario is 1.4 million. And this is spread across the 30 slots that is being owned in that Ibudo Wura, right? So that's typically the case for these slots. At the end of the year, this is what is being generated from the assets, or this is the expected return that's being generated from the assets. And these are the conservative returns that we make. Based on all these assumptions, we are assuming that 20 days in a month is being booked, and we're assuming only 9 months in those days, right? So that's typically the case. Now, all of this information, if you're interested, you can literally type that you're interested, and so someone would note that and follow up with the details and essentially send you all of this. And I'm sure that this is being recorded, so you can go back and listen to it at your own leisure. Yes, so I think we have plenty of questions. I'm happy to answer from now on.
Okay. Thank you so much, Jose Maria, for the powerful insights you've done on that. They were incredibly helpful and truly eye-opening. Thank you so much. So we'll be moving to the questions real quick because we have limited time. Okay, so Joy, I think it's Joy. Okay, Stephanie, our other question was, are we also going to get more rental properties listed in the later future. Yes, let me answer that. Yes, definitely.
Yes.
Thank you, Chidibri. He said the model is actually very flexible. So Emmanuel said, how much is the monthly returns on Buckingham Estate?
Yeah.
I think he joined late. Okay.
So yeah, like I mentioned earlier, the monthly returns for Buckingham, we divided into three, but I'll just stick with the base case scenario. So that's roughly 1.6 million, so 1.599 essentially, right? And that is spread across 10 different slots. Now, in those slots, you can decide to own two, you can decide to own three, right? But for one slot, each slot is essentially generating net income of 150,000 naira every single month. So that's typically the case. And this
Okay.
is consistently paid to your accounts every single month as you own it.
All right, thank you. So Joy asked, when do you start any returns?
Okay, yeah. So you start earning returns in two instances, right? The first is when the asset is fully prepared, because again, we need to make sure that this asset is open for commercial purposes, right? I think Ibudo Wura is opening up this December. So if people are essentially paying every single month for the next 12 months, that means that in between 6 to 12 months, it's open for rental income into the market. So Ibudo Wura is launching, is changing hands and opening to the public this December. For Buckingham, it's opening up next year, right? So you're opening up, so it allows you a lot of time to actually execute and what do you call it, execute and pay your monthly payments without a lot of hassle on your own end. So once it's ready, right, and you get notifications once it's ready, you get to earn income from that asset every single month. So that's how the structure is working.
All right, thank you. Uyega said, is there any provision for the likelihood that Lagos State government may put some regulations in place for the Airbnb shortlet sector? Yeah.
Yeah, I think in my own experience, I think yes. What I'm even looking forward to is really good regulations in terms of how do we promote it, how do we keep it safe, how do we make sure that the sector or the people that are using the apartments have a way to verify them on their own scale, because that's actually what is eating the whole, making it a little bit uninvestable for most people, right? So, for example, in I was reviewing some investment. I think a couple of, was it last year or 2 years ago? It was an Airbnb assets in Nairobi, Kenya, right? And there the real estate regulation is really tight, especially when it comes to taxation. Like it's very high. Like for every payment, if you notice, tax implication is not even included in there because real estate is tax exempt, right? So what government is trying to do is incentivize the sector to even grow faster, right? For most of the posture that I'm getting from this current administration, they're essentially trying to incentivize more investments into the sector. That's why real estate essentially became like the third largest sector in terms of contribution this year to GDP. So you're seeing that the government is trying to reposition real estate as a lucrative investment opportunity, a big contributor to, let's say, GDP and economic activity. So I think that is fine. I think more regulation should come, right? But I think we're positioned really well to essentially, absorb some of the regulation and be compliant at the end of the day. Regulation is not a bad thing. So that's why at the end of the day, I want to make sure that we're making sure that assets are in the right locations, they provide the right returns, and we're looking at certain projections to make sure that things are in the right place as well. So yeah.
So I'll be calling on Stephanie. Hi, Stephanie. You can unmute and ask your question.
Okay, hi. So
Hello.
I need clarity on in the aspect of, I'm talking about the Ibudo Wura. Sorry, I don't know if I'm saying it correctly,
It doesn't
but I
matter.
want to know now if, because I know a lot of people will rush this one because of the monthly, being able to pay monthly the 350,000. Me, I want to know now that if if by the time maybe I'm approaching to the end of the 12-month cycle and all of a sudden, oh, all the properties have been listed, what happens? I don't know if you understand what I'm trying to say. What if
No.
everything is rushed and I'm still in the payment
And,
cycle?
oh, okay, I get you. All right.
Okay,
So
so I just
once you
want to know, okay, what will now be my compensation? Because now the
get,
thing has everything is gone.
okay, so great question. Thank you so much for that question. What happens when you buy a slot and when you start paying monthly is that it essentially takes away the number of slots available, right? So you paying your 350K every single month is towards one slot, right? And that slot is no longer available for anyone to take from you. So that is how it's structured. It's not like you've already started paying and all of a sudden, someone comes in and takes your slots. No. Once you start paying, you've already reduced the number of slots available for that particular asset. So no one can come in and essentially remove you from that. That's it. We've structured it that way.
Okay, thank you. Because now we fight too.
So I have some questions here.
Okay, good.
Okay, she said it's answered already. All right. So do I get documents since everything is done on the app? Like if you're buying a property, do I get documents for this property since they do the payments on the app? So that's the question.
Yes, you actually get a physical document sheet to you, right? So the funny thing is, like, as much as the everything is done on the app, it's done so that you can track everything, right? We don't have a situation whereby you're trying to figure out, have I made payments? Are we following up on you? Right on the app, you can track, how far long you are to sort of finishing the payment. You can also track, payments that are being made to you as an owner of the asset. So it's essentially meant to keep things seamless. But a physical document, a deed of assignment would be sent to you, even it to be sent to your email, but we want something physical that you can actually hold and touch. Again, you're owning this for life. So we want a situation whereby that is reflected regardless of whether we're using tech or not. Right. So yeah.
Okay, thank you. So the next question is, will Keble manage the property? I don't like landlord issues.
Yes,
So that's the question.
Keble is fully in charge of managing all the assets from start to finish. So no one is going to call you in the middle of the night telling you that, oh, there's no light though, right? So that's not your headache at this point in time. Your job is just to make sure that you get your returns at the end of the day. And we've done this to the degree that we've figured out how it makes sense at scale, right? So it's easier for landlords to understand how we operate in this market. So for example, we do something like a monthly to quarterly reports, right? So how many people have booked in these assets based on different channels. So people can book from Airbnb, bookings.com, and the different channels available in the market, right? So how much has been made, what are the expenses, and how much is being netted, and you see that reflective in your accounts every single month. So that's how structured we are in terms of management, especially for properties like this.
All right, thank you. So the next question is, does the rental income grow? What if the rent goes up?
Yeah, quickly, yes, the rental income grows, and I think that's why I started with showcasing like the historic growth and projection of some of the assets, from just the sale of the assets to the normal rental to the short-let rental prices, so that you can actually essentially imagine and picture what a likely projection will look like on your own end, right? And at each property, we have that data that matches, the progression for each of the assets. So yes, as prices grow and rental income grow, you get to see that growth as well in your portfolio.
All right. So the next question is, what if I want to resell it?
Oh yes. So if you want to resell your slots, you can do that. Like I mentioned, it's yours, so you can resell it. If you want to resell it at your own terms, that is available, right? But we essentially, I think we find it's easier that you sell it through Keble, right? So we can just relist it and someone that is interested can buy it off you, right? So I think that's easier for most people. I think we should pick up Jess.
All right.
Session. She raised her hand recently.
Yes, yeah, just
Yes, I did. Hi, and thank you for this. So I have a question. When you say that you only start to earn when the property is complete and in the market, what does that mean? Because I mean, I get it, but I guess my question is more from an angle of, say, when you go on the Keble app right now and you want to invest, it has the feature that gives like fixed deposits and fixed term duration rather, right?
Yeah.
So if someone starts to pay, say today in August, and say it's for a year or 9 months, the expectation is that, you know, this time in 9 months, you should have received your total returns, right? But when you say that you only start to earn when it's in the market, so that means if it takes a year, your money isn't really working for you for that year until it's in the market. Is that what it means?
Okay, great question. So we have 3 offerings in Keble at the moment, right? And the offering that we just explained is the co-ownership offering. So where you actually own an asset and it yields monthly cash flow and capital appreciation for life, right? We have another offering called fractional investing, and that offering allows you to earn income at the end. So if you put in like ₦1 million today, it has a locked-in period, a fixed locked-in period, and a fixed dividend of, let's say, 30%. And at the end of that 13 months or 10 months, you get your ₦1 million and your 30% paid to you. So that one is literally fixed and it has a fixed timeline. So that is a different offering entirely on its own. This offering is essentially you are owning the assets and Keble is essentially taking up the management role to make sure that the asset is generating income every single month, right? Now okay, I think you wanted to ask, just follow up. Just
carry on. I'll wait for you to be done.
Okay. Now, in this offering, right, the focus is most of the assets are still either still under construction or about to finish. So there is a timeline for it. That's why, in a way, they are really relatively priced at a low point because each, for example, Buckingham Estate, the price changed last week for the studio apartment from 90 million to 98 million today, right? And it's still in the construction phase, right? So as the market is changing, it's still adjusting as well, right? So we want a situation whereby people can lock in that and essentially own it. And the timeline also matches with when you're making your monthly payments every single month towards the eventual push of the assets into the market for rental income. So I think that's how this particular offering is structured. For the investment one that have fixed returns, you already know that, okay, if I put in 1 million today, I'm going to get 300K at X date. If I invest today and 13 months from now, I'm going to get my return and capital back. That's a whole unique offering on its own. So I don't know if that helps to clarify.
Yes, that's very helpful. Thank you. I guess my other question, my follow-up question previously, I think you already touched on it, so I'll move on from that one. My other question is, I mean, God forbid, obviously, but if it doesn't do well, what does that mean for investors?
Fantastic question. Right. So what we do is that most of the assets that we pick, right, we vet the developer first before we vet the project. And what that means is that in terms of consistency in delivery of projects, we prioritize that above any other thing, right? So for example, Ibudo Wura estates now, it's being developed by Mr. Africa, right? It's sold off now at the moment in the markets. We just locked in Ibudo Wura, I think 2 weeks ago, right? That estate is #1 priority for the developer to complete. One, we already have a timeline for completion too. And this is the second project this year that they're going to complete. So we already know to some degree the intensity that is being devoted to the completion of the assets. And the timeline is essentially, like again, conservative on their own part, because it's essentially done, at this point in time. Similar to Buckingham Estate, right? This is the second project that is being done in the last, in the last 15 months or so. So this is a routine with the developers that we partner with, right? So we essentially back on that credibility to provide the offerings that we have on the platform. And we've done this in multiple occasions. So this is not the first time we're doing, financing some of these projects at scale. So I think that gives us enough understanding of how they work. In terms of the lifespan of these companies, they've been around for close to 10 years. So I think that gives us enough understanding of how they work and how they deliver on projects consistently every single year. I hope that helps.
Yes, that helps. Thank you. One last question. I'm sorry, okay, I'm almost done. My last question is, and I might have missed it because I joined early and then I had to jump off and then I came back. Did you share visibility on how many properties, say 3-4 slots come to? Like, I don't know, like when you say per slot, I know that doesn't mean one apartment for sure. Because one can really buy 4.2 million as a two. So what does that mean in terms of ownership from your perspective as the one who's the convener of this? So how many apartments essentially are you saying we have available, but we have 10 slots?
Yeah, so each apartment, for example, in Buckingham, each apartment is just 10 slots. So every opportunity that we have, we divide each apartment by a denominator. And for this one, we're just saying 10 slots. Similar to what we did with Ibudo Wura. Ibudo Wura is 30 slots, right? So people can buy 2, 3, 4, depending on how they're planning their financials on their own end, right? So that's typically how it's structured. So I think I mentioned earlier that, okay, and for one apartment, you can decide to buy, and again, you can decide to buy the entire slot, and that's okay. That's perfectly fine, right? So, but we have for each asset, we decided that, okay, to just create some level of flexibility for each person. And if they're interested in owning something that has an upside potential in terms of returns, they can still come into that property ladder in case they want to. So I think that's why we divided each property or each apartment by the slots. So in most of the presentation, you will see that we mentioned 2-bedroom apartments. So just one 2-bedroom apartment, but has multiple slots embedded in it, and people can buy those slots as they choose.
Thank you. I'm done now. Thank you.
Thank you so much, Jess.
Okay, Resta ends. Hi, Oge. Can you unmute and
Hi
ask your
again.
question?
Hi. So my question is, so earlier, Jose Maria said something around you can resell on your own terms. Does that mean you can resell at like a higher price than what you bought your slot for?
Yeah,
Or
100%.
do you expect that Keble would offer you a higher price than what you bought your slot for, depending on maybe the current valuation or anything?
Yeah. So when I mentioned you can sell at your own terms, I was actually referring to you can sell to someone outside the platform, right? So you could sell to your cousin, or you could sell to your friend, or you could sell to, oh, I have this slot here. Are you interested in this? And that is totally fine, right? So when I said, okay, you can use Keble, is that you can leverage Keble's network to sell your slots or to sell your option on the platform, right? So that's the context for that. In terms of the price points, yes, it's obviously going to be at a higher price point, because at that point, it's already an income generating asset. It's already standard, right? So the price point will generally be much higher than what you paid for it at this point.
Okay, thank you.
Yeah. So any more questions? I think it's you're talking, but
yeah, thank you. So
Yeah.
before we end this session, Kennedy asked a question. He said, when can payment commence for Ibudo Wura code? Yeah, when can we start payments?
It's available at the moment. So you can start today. I love this.
Barry asks, is any of your properties marked for demolition by the government?
Yeah.
Scared of investing in real estate, in Lagos real estate?
Yeah. I think, my own perception in Lagos real estate is slightly different because even my own family, we have properties in Lagos and none of them have been demolished. But for some reason, people are always scared of Lagos. And it's just interesting to see the fear. And I think the fear is very valid because they happen every single day, even though the worst are obviously being publicized to on social media and the likes, but they happen every single day because Lagos is constantly working. Lagos is constantly trying to reshape its image as the top city in Africa, right? So essentially that gives a lot of credence to like the question itself. So that's why initially in the conversation, I said that one of the interesting things about some of these offerings that we're providing is that they are already in line with the Lagos plan, right? And they're already C of O assets, right? So they're already certified by the government. And that's typically my own take in Lagos is that number one, the first step is to have the CFO ready. So that's where like the foundation of every conversation is, okay, is the CFO in Lagos? Okay, good. The second thing is like when it comes to construction, there are obviously layers of certifications that happen, right? And those layers are important because they help in guiding the developer in terms of how the project should be. So it's not just, it doesn't end at CFO. Most people think it just ends at CFO. It doesn't. There is LABSCA. They come for checkup every single month, right? To make sure that it's already standard, you're building to standard. And that's something that all of the assets that we have, or the two assets that we have, also match up. So yes, there is still like the fear is very credible, right? But these are the things that we are doing to make sure that the asset that you invest in, we want you to earn this income consistently. We want you to see how you can earn it for life, right? And if you want to sell it off, you can sell it off with ease, right? So that's really important. I hope that answers your question, Mr. Barry. Awesome.
Okay. So I think the last question, just like I think it's clarification. Okay, Barry responded. Good, thank you. So Sarah she asked, so one apartment is not one slot, then she wants clarification on that. And if so, how many slots would make an apartment?
Oh, fantastic. So for example, Buckingham is over 200 million, right? Now, from my own experience, there are a couple of people that would like to invest in an offering like this instead of buying the 200 million. There is someone that has 200 million and doesn't want to lock it in one asset, and that's okay, right? There's someone that doesn't have the 200 million, but wants the ability to actually earn capital appreciation or to be part of a society or be part of a location that can yield the returns of 200 million assets. And that is someone, there are different categories of individuals, right? In Buckingham, for example, it is 200 million, right? And what we did was to open it up to 10 different slots. And what we can see is that two people can come in and say, okay, I want one slot. Another person can say, I just want two. And that's okay, right? But the point of this is that you can allow yourself to really pick locations and earn income in certain locations that otherwise would have not been open to the average person, right? Or it can allow someone with huge capital to diversify their portfolio instead of locking it into one location and one asset, right? I know a couple of people that just have properties in, you will see that, okay, they have 200 million here, 500 million here, and it's just in one block of, so if anything happens, it's just stuck in one location. So this allows for a level of risk diversification, a level of mobility in terms of your portfolio. You know, you can move different locations and earn income and sort of build your wealth as you go along. So yes, each apartment has different slots. So I think Ibudo Wura has 30 slots and Buckingham has 10. So yeah. Yeah, we have, it's know, you're muted.
Oh wow. Thank you. Oluwatumi raised her hand. Hi, Tomi. Please unmute and ask your question.
Hi. Yeah, it's not a question per se. It was just a contribution. Because I know like the question that Mr. Barry asked as well. I think I just had a little bit of context. I just wanted to share, maybe just to help too as well. At least from my own experience, is like, properties are not typically demolished in Lagos the way people think about it. The only time like properties are demolished is, when it's built like contrary to like terms and conditions of like a development permit or approval. If you look at a lot of the cases, right? Or like where the right of occupancy of the land on which the property is built has been cancelled or revoked, whether for non-compliance, like people building houses too close to like the beach, for example, beachfront. And like there's legislation that says like, the beach is the property of the government and you must build only X meters away from that, right? But under normal circumstances, the government says they want to use your property, they can't just take it. So there's something they call a claim for compensation, right? And you can make a claim for compensation. So they typically would either move you to a very similar property in terms of value, or maybe they'll pay you market value for that property. So, I just wanted to just chime in. Like, if you look at things like the Land Use Act and all of those things, they can't just legally take properties from people. So there's always a question mark, or there's always a comma a lot of times that is very unspoken in a lot of these things that we see on the media, whether it's social media or TV or whatever of those things. If you dig in further, you see that there was an issue. And I think like, working like, buying properties or like using Keble for a while, I've noticed that like they take like due diligence like really seriously. So I think once we're getting like CFOs and like proper documentation, I think like we're all in the clear. So just wanted to add that context because, just to help a fellow investor.
Thank you very much.
Thank you, Tommy. I think that will be the end of questions. Thank you so much, Jose Maria, for giving detailed answers to those questions. Thank you. All right, we've come to the end of tonight's Home Circle, and we just want to say a huge thank you for spending your evening with us. Thank you so much.